Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. There's only going to be one thing on your mind at the moment. We'll get to it. But remember, there is always stuff going on in the background that will impact your investment plans, whether you realize it or not. Granted, much of what's happened in the last few weeks pales in comparison to the impact of the budget. But focusing on the wider market is especially crucial now. As the economic picture changes, as the news cycle ramps up, you'll want to know what your options are. So let's remind ourselves of some of the essentials before we move on to the obvious big news story of October. This month, it was revealed that the UK economy returned to growth after a few months of basically flatlining. And inflation has finally fallen to below our 2% target. Also, Zoopla, Halifax, the Land Registry, they all recorded house price growth in October. This is encouraging in itself, and Andrew Bailey seems to agree. In an interview with The Guardian, the governor said the Bank of England could now become a bit more aggressive regarding base rate cuts. His words exactly, verbatim there, so fingers crossed for that. There are also reasons to be positive in the housing market too, or the residential market. Supply and demand actually appear somewhat in tune at the moment, somewhat aligned. Get Agent reported that demand for homes is high right now compared to last year, and supply is also there too. Rightmove found that Buyer Choice hit a 10-year high in October, while Zoopla found that house sales are at their highest level in 4 years. So we've got supply and demand high in equal amounts there, or roughly equal amounts. This isn't all that surprising, though, when you consider the level of confidence that's behind all this in the market. Mortgage rates themselves are at 15-month lows, according to Moneyfacts, and the Bank of England reported that mortgage approvals are at a 2-year high as well. So confidence is there despite all the negative sentiment that you're seeing in the headlines. There are also options for those who aren't actually looking to expand their portfolios at the moment. Instead, it may be worth looking into tidying up those existing assets that are already in there. So to illustrate, research from early October, from a few weeks ago, revealed that hitting the government's EPC targets, the minimum grade C in 2030, that will cost landlords collectively roughly $21.5 billion. And that's obviously a very painful, very large figure there. But ultimately, hitting that target will be fruitful, as the Mortgage Advice Bureau found that 61% of prospective home buyers would be more likely to make an offer on a property if it had a good EPC rating. And actually, this could be even more beneficial in the commercial market. According to Knight Frank, office properties that have been retrofitted to a higher efficiency standard are able to generate 18% more rent on average compared to prime assets. And also, actually, if we stick with the buy-to-let market itself, the latest data showed that average UK private residential rents rose by 8.4% in the year to September. So tenant demand is there, and it may only get more intense if we do see a bit of a sell-off over the coming months. And intensity is actually the name of the game right now. Property sales are going in the right direction, but recent analysis also found that more than 1 in 4 property sales fell through in England and Wales between July and September this year. And that cost us collectively, again, £900 million in the process. If we look into the specifics, chain breaks, gazumping, and difficulty with securing a decent mortgage was behind much of these fall-throughs. And these should sound familiar because they're all issues that specialist finance can help with. So if this sounds familiar to you or any of your clients, why not give us a call, see if we can help out there. And indeed, bridging itself, the specialist market itself, will likely come to the rescue a lot over the coming years on that. Indeed, the bridging market itself, and specialist lending specifically, will likely come to the rescue a lot over the coming years, with a recent forecast showing that our industry is set to grow by 70% by 2029. We're going to become increasingly important in the property scene. So I've covered some of the main points I wanted to cover, but obviously we've now reached a point where we're going to have to talk about the budget. So I'm sure you've caught up yourself by now. You've got your own views, your own fears, your own strategies to try and incorporate now. But it was a bit of a mixed bag. I'm not going to go through the details, but some of the key ones for the property market and investors and the investment scene in general. So we all know that Rachel Reeves confirmed there's going to be 40 billion worth of tax rises, as Labour have said, actually go into public services. Inheritance tax, there's been changes there that may impact how people get on with their estate planning. And for property investors, there was actually a bit of good news when it came to capital gains tax. They've been spared from some of the hikes that everybody was fearing, but there has been an increase in stamp duty on additional property purchases, going from 3 to 5%. We all need to digest how this will affect us. No doubt costs will go up for some. We might see more of a sell-off, but hopefully and most likely the property market and the economy at large should come out cleaner at the other end. I'm a big believer in supply and demand really swaying how things move as opposed to any sort of economic or political tweaks. And there is a demand for property and there is a limited supply, so there will be opportunity hopefully out there at some point. On the budget though, I am actually working on the next Industry Reacts, and if you haven't seen the series on the Market Financial Solutions website, I basically gather insight from across the property spectrum on the latest developments, and obviously I'm going to be reaching out to those insiders for their views and their take on the budget. So yeah, keep an eye out for a bit more analysis on that in the coming days. And yeah, I hope you bounce back from the budget quickly, and I will see you next month. Thank you. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.